Hello, everyone, and welcome to 360 Retirement. I'm your host today, Paul Gebhard, with my special guest, Keith Wiltfong of Capstone Planning. Welcome back to the show, my friend.
Oh, great to be back, Paul.
It's good to see you. Always good to see you. I love all the changes that are going on in your life. I understand you guys are expanding,
Yes.
growing.
Yep. Growing and expanding.
Yes.
Yep. So we have a 6,400 square foot building going up as we speak.
Wow.
We're planning to break ground very shortly here. So very excited about that. But we're really expanding all the different aspects of our business, from taxes to the Medicare planning we do. Basically, we do mortgages, and then also the financial aspect, stocks, bonds, mutual funds, as well as some insurance components. So it really is that 360 experience. Our goal is for someone to be able to walk in and get everything covered in one spot.
Kind of the one-stop shop.
That is the goal.
Love it. Love it, the whole 360 thing. And you know, it's interesting that you're talking about that, because I know there's lots of folks out there that wonder, say, gosh, I got this over here and this over here, and I want to make sure that this team is working with this team. When they come to Capstone, having that 360 retirement, you guys have that built in.
And I think it's so important that things complement each other,
Oh,
because a lot of the times when someone will initially come in, they'll have maybe one advisor here and another advisor here,
Yeah.
and they'll have still the 401k plan there, and maybe like an old variable annuity and a whole life policy. And it's just things that are not working together.
Yes.
And our goal is to make sure the pieces all fit together and form a cohesive plan for that purpose, which is retirement.
Right.
And to make sure that retirement is sustainable through all the what ifs in life.
Right. So that everything is in a nice synchronicity, right?
Absolutely.
The harmony
That's-
we're all looking for. We want you to have less stress, not more, right?
Exactly.
That's the goal.
That's the target.
That's exactly right. Okay, so let's break into one of the questions that, I've heard, say, hey, Paul, I've got $500,000. Can I retire?
Yeah, and the answer is it depends. So obviously, if we're already into 65, that makes it a lot easier just from a healthcare standpoint. Because a lot of folks, the biggest thing when they're pre-65, before Medicare, the question is, what am I going to do with health insurance?
Right.
Because health insurance from 62 to 64 can be extremely expensive,
Yes.
depending on income and a few other variables there. So that's one thing to look at. The other thing we always look at is, what other income sources will we have coming in? How does Social Security look? Do we have a pension? Does it have a cost of living adjustment? If we do have a pension, what's the survivability of that? And then also, outside of just the 500,000, we'll also take a look at what's the debt, right? Do we still have a mortgage? Do we have car debt or credit card debt? So taking all those variables kind of into play. But if you're someone that's 65 and your goal is, say, hey, I want to have 4,000 or 5,000 a month, right? Because another huge caveat is going to be, what does retirement look like to you?
Right.
So if you want to live off, say 2,500 or 4,000 or 5,000, or if you want to live off 10,000 a month, right? Those look very different.
Right. So what the expectation is, you're saying, is very important to that plan. Right?
Yes, yeah. And ultimately, what are the goals, too?
Yeah.
Are we going to travel locally? Do we have aspirations to travel abroad?
Right.
All those things are going to really play into that calculation, so we can really build out that 360 plan to make sure it makes sense. Because the last thing we want to do is to retire, kind of pull the trigger, and then have to go back to work. So a lot of our clients work part-time, and it's more or less for the social interaction. It's not because they have to, it's because they want to. And there's two different mindsets of having to work and then choosing to work.
Right, absolutely.
So if we can get to job optional, that's where we need to get.
Job optional. I like that phrase. Yeah, I like it. Let's do more of the job optional thing, right? Okay, so I wanted to ask you. So let's say some folks out there, they've had a planner, or maybe they've inherited a planner, and things have seemed to be okay, but maybe they haven't met with them recently or in a while. How important is it for someone to get a second opinion, Keith?
I think it's just like a medical diagnosis. You should always get a second opinion. And I even tell folks, that work with me, if you want to get a second opinion, happy to take the test there. Just because I don't think you should ever be scared of a competition per se. And I think if you're doing the right thing for the client and you have all the capabilities, the biggest thing that I see with a lot of the advisors today is the tax advice gap. where they really don't offer that tax advice, and they don't understand taxes. And at the end of the day, it's not necessarily what you make, but it's what you take. You
Sure.
actually get what you put in your pocket and bank account, and taxes play a critical role in that. And being able to do some of the tax planning rather than just saying, "Hey, we made you X amount this year," I
Mm.
think is critically important.
Yeah, it's interesting you're talking about taxes. I'm going to switch gears and go back to taxes for a little bit. I know we talked about it in the past, but it's one of those things I think you got to constantly be talking about. Um, Nobody knows what the future is holding with
Right.
taxes, right? With the current bailout situation. But for the viewer out there, help them understand why it's important to have a tax plan versus, say, just the traditional tax preparation.
Right, yeah. So tax preparation is really just truly just a history, right? It's
Mm,
what happened over the last year. You bring it to your CPA or tax account or tax preparer, and they say, okay, well, this is how much you owe, or
right.
this is how much you get back, right?
Yeah.
Where tax planning, what we do is we'll take a look at really the next 5 to 10 years, depending on the situation, and we'll say this is what we need to do today, and then next year and the year after.
Hmm.
So one thing that we've been structuring lately have been Roth conversions. And
Mm,
Roth conversions is basically saying we're going to take some of that IRA money, pay the tax on it now, and convert it to where it's never taxable again. And there's two main kind of strategies that we use for that. One's called a bracket bumping, where we'll take them to the next bracket, so we're not going to increase the tax too much, right? And then the other one is what's called a market timing.
yeah.
And you can think of this, think about like a slinky almost, right? So this is the IRA goes up and down with the market, right? And let's just say in 2020, in February and March, during initial when COVID hit, and the market went like this.
Right.
So that'd be a perfect time. Let's say we want to allocate to convert 20,000. We'll take that 20,000 when it's smaller, convert it to a Roth IRA, and then when it comes back up, like it has over the last year or so, now all that money is 100% tax free.
Wow. Tax free.
So that's what we try to structure. And we also kind of insulate from those future required minimum distributions, which is the money that you have to pay starting at age 72 on all your basically pre-tax money, your IRAs and 401ks.
So when you say, okay, tax free, you're meaning tax free. And a lot of that is just because you've got a tax plan set up to make you efficient to get to that tax free bucket, correct?
Absolutely.
Okay, that's good stuff. So hopefully you're making notes out there. You're taking some notes down. You had mentioned a little bit ago, we were talking about diversification. Why is diversification something important for folks, especially when, let's say they got something in the stock and it's done incredibly well for them,
Yes.
but the closer and closer they get to retirement, maybe diversification is something they need to consider.
And the one thing that we'll see is someone will work for a company for a long time and
Mm,
they'll have, in my opinion, too much of the company stock. Where literally
gotcha.
like 90% plus
Right.
is that company
Mm,
stock. And we had somebody come in a few years ago. Won't name the company, but we talked to him about the potential risk, and he loved the company. Had a good pension from the company. Everything was good there.
yeah.
We said we should diversify this risk and kind of use Enron as an example, and a couple others on why it might be a good idea to do so.
Right.
And they looked at it and they said, yeah, this makes a ton of sense. Like I love the company, but this just makes sense. This is going to better protect my family.
Mm,
And at the end of the day, that's what we're all about is basically protecting families.
absolutely.
So they made that decision, and then lo and behold, a few years later, that company dropped like 50%.
Whoa.
Had they not made that decision, they probably wouldn't be retired today.
Whoa. That's a
'Cause
life-changing decision.
Portfolio would have been cut in half.
Wow, that's a big number, a huge number, and just by the fact that you were able to diversify, because, like you said, they had their pension there,
Yeah.
they had a lot of stock options that built up. You just wanted to make sure that they didn't have all their eggs in one basket, so to
Yeah,
speak.
and I think it's the biggest thing is education. I think all
Mm,
too often people don't understand how much risk they're taking in their portfolios. Like,
yeah,
how much risk am I really taking? How does this portfolio do in, say, a 2008? Or like a 2000, 2001, 2002 when the market goes down 50%?
yeah,
How does my portfolio hold up against those time periods?
yeah, absolutely,
And understanding that, I think, gives them the insight
yeah. I love it.
to make the decision.
We're going to talk a little bit more about risk when we come back. We got to take a break, but
All right.
I understand you have an offer for the viewers today. If they reach out and call,
Yes.
yeah,
So for the first 10 callers, those that are interested in a 360 retirement plan, which is a complete stress test of your current existing plan, call us today, 888-222-4498, and set up a comprehensive consultation, and we'll get you all squared away, and you'll be planned for all the what ifs in life.
good stuff. And again, that's complimentary. I've seen people charge as much as $1,500 a session because a lot goes into you. All you have to do is take action. Make sure you're named. is in one of those spaces, right? You can do that by calling 888-222-4498. We're going to take a quick break. We'll be right back after these messages.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Well, welcome back to 360 Retirement, everyone. I'm your host, Paul Gebhardt, with my guest today, Keith Wiltfong of Capstone Planning. Again, Keith, thank you for being with us again. Wonderful segment there. But you mentioned a little bit about risk. You kind of sprinkled it out there, and
Yes.
it made me think a little. So I wanted to ask you, the importance of risk management as we get closer to retirement. How important is it?
Yeah, I think it's critically important. I think it's often overlooked, where a lot of times they'll have a 401k plan or something like that and just kind of set it and forget it. And a lot of the times for 401k plans, if you can say, hey, I want to retire in, say, 2025 or 2026, using or utilizing some of those target date, that way it's kind of auto-magically rebalanced for you without you having to go in and tweak it if you're not currently working with someone that is going to willing to help you to do that.
Yeah.
But as far as risk and John, we really saw it in 2008, and not only in the stock or equity markets where they completely got hammered, but also in the real estate market.
Oh, yeah.
I mean, we talked to a lot of folks that had 10, 11, 12, rentals, and then all of a sudden it got cut in half because now the real estate's not worth anything, and it just was a catapult effect. So not only is their portfolio down, but also the real estate portfolio is down. And it's funny how like the different correlations really work together between foreign stocks and US stocks and things like that. So there's usually a different correlation, but correlation is a relationship. And as we know, relationships change over time.
Absolutely.
And in 2008, these relationships started to look a lot alike.
Right. It's
Right?
the truth. Yeah, like mirrors almost, right?
And I think the biggest way to kind of guard against that is through rebalancing. And it's really counterintuitive to a certain degree. So if something's doing really well, a lot of people say, I want more of that. Right?
Right, of
like
course.
the stock market in the late 90s.
Yeah.
I want more tech stocks because it's doing really well.
It's doing good. It's like a reactionary thing we have, right?
Right.
Get more, get more.
And then the things that's doing bad, you're like, I don't want that at all. I need to sell it and get rid of it.
Right.
But really what you should be doing is selling what's doing well and buying what's currently down. Understanding the long-term rates of return on various asset classes can be a huge catalyst to make your retirement a little bit more bulletproof. Nothing's guaranteed out there,
Right.
but it's definitely going to be helping you out a lot.
Yeah, it's interesting what you're saying, rebalancing that. It makes a whole lot of sense. It's interesting also what you had mentioned, 2008. I was one of those people. I got stuck with a lot of rentals, and I pushed a bunch of stuff into it because I had such great return.
Yeah.
But boy, when it came down, it really affected us. We had to basically start over.
Yeah.
It was really kind of tough. But
And I think the other thing is, as far as kind of that 2008 when it's down and people not understanding the risk, like the worst thing that I think can happen is someone capitulating, kind of make that emotional decision
Right.
to sell. And I think too often in those really down times, even with the COVID-19, we had that February and March, there was a lot of sell-offs. I think it was 80% or something moved somewhat to cash or something along those lines in their
Wow.
401k plans.
wow.
Right, which is really designed for long term.
Right.
So those are the decisions that you got to make sure that the risk that you're taking currently, you're okay with. And one of the things that we'll do, we'll actually do this report for them and actually say, hey, this is all the risk you're currently taking among all your assets. And what happens if we have like a 2008 or 2000, 2001, 2002? How does that look? What if we have that COVID pullback of 37%? How does it match up? And not only in percentages, I think a percentage, it's too say, oh, I could deal with the 20% decline, right? And then you have $1 million portfolio. Could you deal with the $200,000 being down? Are you okay with how many years that took to build? Are you okay with 200,000 down? I think it's a different conversation we put into dollars rather than just the simple percentages.
Yeah, no, it's so true. And you mentioned, one of the key points there is the time.
Yes.
Time element. That's the big thing. We all know that time is not renewable.
And I think too often people look at modern portfolio theory, which was in the 1950s, so I don't know how modern it really is. But so what we do with also, we work with a lot of the tactical managers. So we're not going to ride all the ebbs and flows of every single economic cycle, because it's great for institutions, because institutions last forever.
Yep, right.
We're human beings. We have a finite life expectancy.
Right.
We can't deal, for the most part, maybe some assets, but a 50% decline. We don't have the time frame to make it up.
Sure.
So that's one thing that we'll really kind of look at, say, hey, can we position this better, more for our time frame rather than an institution's time frame?
Right. And that's a wonderful point that you make there, because you're right. I think a lot of times we get caught up in that, right? Depending on it. But you're right. It's about our individual time span, right? And how much time we have left. And retirement's one of those things, you only get one shot at it.
Right. And then the other thing I think that's really different is the sequence of return risk.
Okay.
So during accumulation, when we take out money, it doesn't really, during the accumulation phase, we're not really taking out money. So it doesn't really matter as far as what sequence, if we have a 10% or 15% return. But when we're actually taking out assets, if we have a huge decline and then we still have to take money out, we have to climb that much farther just to get back to even. So if you have first few years in retirement that are negative, it can make retirement life very difficult if not planned accordingly. So one of the first things that we'll almost always set up is basically like a bucketing system, where we say, hey, this bucket is going to be basically our now. We're going to have 12 months of income here. So we're prepared for that short-term volatility. And then we're going to have our next bucket. It's be about 2 to 7 years, maybe 2 to 10, depending on the person's age and goals. And this is going to not wiggle as much. It can wiggle a little bit, but it's not going to really move that much. And then finally, we kind of have that later money that we say, hey, we have a 7+ year or 10+ year. Now, we understand that risk and return are correlated, so we're okay with it wiggling a little bit more, understanding that we're going to be rewarded long-term for that. And then as life goes on, we just simply flow the later into the soon and the soon to the now as life goes on. And it really helps us prepare for those big dips. And I think it really helps with a lot of peace of mind.
Yeah.
Knowing you have that established, when we do have a big bounce, like in February, March of 2020, I didn't get one phone call as far as. Now, I reached out and spoke to people, but no one called me reactively saying, hey, I need to change my allocations, because you have that plan in place and you have peace of mind around that plan.
It's good. So the diversification was in place and they had planned that out accordingly.
Absolutely.
They were ready. And that's really the key, right? Is being prepared. Why do you have a good plan? You got to be prepared. I mean, you plan vacation.
Right.
We're talking about retirement should be that vacation you get to take for life.
Yes.
Right? So you definitely want to get that plan right. Listen, we got to take a break here in a second, but would you remind everybody out there what you've offered today, what you brought along?
Yes, so our offer is for the first 10 callers that call in now, we're going to offer a full 360 retirement plan. And what that really means to you is you're going to make sure you're covered for all the what ifs in life. What if I live a very long time? Or what if my spouse passes away? Or what if I get sick in retirement? All those different what ifs, we're going to make sure that you're covered. So call now, 888-222-4498.
Thank you for that. And again, it's complimentary, folks. Take advantage of it. There's only a few spots. They're finite, but you can claim yours. All you have to do is take action. Take control of your retirement. Pick up that phone. Give us a call. 888-222-4498. Thank you. We're going to take a quick break. We'll be right back after these messages.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to 360 Retirement, everybody. I am your host, Paul Gebhard, with my guest today, Keith Wiltfong of Capstone Planning. We're into our last segment today. I mean, it's crazy how time flies by, Keith.
Time flies when you're having fun.
It does. And who says talking about money can't be fun, right? So that's what we want to do, is have fun. It's not just about retirement, right? It's not about just planning and getting to retirement, getting even through retirement, but it's really about having an enjoyable, fun retirement, right? So I got to ask you, I mean, because there's a lot of moving parts to a retirement plan. When we talk about the retirement structure, can you walk us through that from the beginning, like through the end, the process? What does the retirement structure look like?
Yeah, so how our retirement structure, I mean, the first conversations that we always have is basically to figure out, kind of who you are, you figure out who we are, but then really exactly where you are today. And then the next thing we're going to look at is, okay, now we know where we are.
Yeah.
Where do we want to go?
Right.
Just like a GPS, right?
Sure.
If you put in the destination, you don't know where you are, it's pretty impossible to get there.
Right.
So then we now have where we want to go. So now we just build a road or build that kind of GPS system on how to get there. And then a lot of how to get there is, what are the goals? And usually we'll start kind of high level as far as, what makes sense, per month, or what makes sense as far as how much vacation budget we want to set, if it's going to be local travel or international travel, or maybe the kids or grandkids are going to come see you. And the next thing we'll delve in, once we kind of have the high level, we'll really kind of get into cash flows as saying, hey, what do we have coming in? Pensions, Social Security, investments, real estate, if we have annuities or other insurance vehicles, what's currently coming in, and then how to best structure those. And then usually we'll take the approach where we understand that you know how you feel today.
Right.
And we say, take advantage of that. So we try to really structure more income in the beginning when you know you're feeling good, and then kind of have it go tail down a little bit. Rather than just a straight cash flow with inflation, we'll kind of structure it so it comes down a little bit when you're 80, 85, because typically you're not traveling as much, not doing quite as much there.
Sure,
and then we kind of have a tail at the end where we know for healthcare costs and healthcare expenses, we know it kind of goes up. So it's really more of a U than a straight line as far as the general structure. And once that's all kind of squared away on piece of, like, hey, if everything works perfect, this will be good.
Yeah.
Then we really try to shoot holes in it. Like, how can we break this plan?
Oh, got it.
What if someone passes
So
tomorrow?
that's the stress test you're talking about.
That is the stress test.
I like it.
So what if someone passes? How does Social Security look now?
Yeah.
How does our pension look now, right? How does the cash flow changes? Do our needs change? Do our wants change? A lot of the times, the cash flow one person passes doesn't change that much. So we really have to make sure we have everything in place so that plan can continue on. And a lot of times, those are really tough conversations that need to happen.
Yeah.
No one wants to think of themselves getting sick. No one wants to think of themselves dying. But we have to deal with the reality that at some point in time, we will pass. And most likely, not everyone's going to pass at the same time.
No.
So really planning for the surviving spouse is what a lot of our planning goes into. And then if they have goals of if they want to leave a legacy. So one thing we could do there is basically if we structure, say, a second to die policy or something for a certain amount. That way they say, hey, no matter what, I'm going to leave my kids X amount.
Right.
And that really gives themselves a permission slip to spend everything else.
Right.
And
I like that approach.
And some people kind of, it seems like they need that.
I like it.
I would say the hardest thing, though, as far as when someone's getting ready to retire, not in retirement, is changing gears. Going from working the day-to-day
Sure.
to all of a sudden retired.
What do I do with my time?
Yes,
That's what you're talking about.
That really has to be planned out.
Yep.
Because I think too often, right? Because a couple that's not used to seeing that much of each other, it can be a change, right? I think we've seen that change with COVID-19 if couples spending too much time together sometimes, right?
That's where that job optional thing comes in there, right?
Yes,
It's,
yep.
it's where the wife or the husband says to the other one, hey, I think you need to get back out in the workforce.
Right, go to the golf course, right?
Exactly. Become a golf ranger or whatever the case may be.
So I think the life planning is
Yeah.
a critical
Oh,
portion of that.
absolutely.
Because a lot of the time, a part of your identity can be, if you've worked a job for 30, 40 years,
Right.
like if somebody says who you are, that can be, hey, this is who I am, this is what I do.
Sure.
And then if that's gone in a day, that that takes some adjustment.
Absolutely
And
does.
being able, plan and prepare that, I've worked this hard for this.
Yeah.
And then I think the biggest thing is the relationships with people retiring and stuff, missing that kind of water cooler conversation.
Oh, yeah.
So I think it's important to have a really good circle of friends, and I think that all really helps.
Yeah, yeah. It reminds me of a little advice I got from an Italian flower shop owner. He said, son, if you're not making money, you're spending money. And I think that's what everybody's thinking about when you
Yeah.
talk about that, right? It's
Yeah.
making sure you have that adjustment made for your time, right? Whether you're
Yes.
doing something philanthropical or whatever the case may be. But all these things are the fruits of good planning,
Yes.
right? So that you can do the things you want to do instead of the things you have to do.
Yeah, and I just think too often that people forget the human aspect and just look at the dollar and
Oh, of
cents.
course.
And there's so much more to life than the dollars and the cents.
Ah, I love that.
Because I think, planning, like I said, planning for those people problems
Yeah.
can be critical. Otherwise, they cause real problems and financial problems down the road anyway.
Yeah, that's the truth, totally. And just think about it. A lot of folks never really say, hey, he had too much money. They always talk about the opposite. They have
Right.
enough to get through.
Yes.
And so a good plan will help you a lot for that and plan accordingly, right?
Yeah, we always do something it's called a Monte Carlo simulation, which basically it means we're going to run hundreds of thousands of different types of sequence of returns and say, hey, what's the probability of success for your financial plan currently? And they'll give us a number, say like 80% or 90%. And then, some people are different comfort levels. So some
Yeah.
people are okay with like an 80% return or a 80% probability of success. And I would say, so you're okay with your plan failing 1 out of 5 times? And they go, well, maybe not. Maybe I want to get a little higher.
Let me think
right?
about that one. That's good stuff. Believe it or not, my friend, we've come to the end, right? And again, I want to thank you for sharing such incredible information for people out there. But this comes down to you and your future. What do you want to see? Who do you want to share it with? Money touches every aspect of our lives. An effective plan is all the difference. Not just to get to retirement or through retirement, but to enjoy it. To be able to actually enjoy retirement. Complimentary calls. There's a few spots left. 888-222-4498. We want to thank you for being with us. Enjoy your retirement, everybody.